So welcome everyone to Wealth Building Wednesdays. Just a reminder for anybody who's new anybody, just a reminder, this Wealth Building Mastermind, this is a monthly mastermind. It happens on the second Wednesday of the month. It is specifically geared towards real estate professionals of any type. So title company, lender, investor, agent, whatever. We invite the real estate professionals, and then the real estate professionals, you guys are able to invite friends, family, anybody that you know who would be interested in attending. They don't necessarily have to be real estate professionals as well. And my screen's going to bug out on us probably. Can you still see and hear me, Dan?
You're perfect now. You came back.
All right, so this is an ongoing problem with Zoom for some reason on this computer. So I'll probably bug out a couple times, and if I do, I might turn my webcam off and then back on. But anyway, invite whoever you want to this. If you get value out of it, then bring friends next time. Tonight we have Dan Costantino. Dan and I go not way back, but back what? When did we meet? It was 2018?
Probably 17.
Okay.
Probably, yeah, I think 17.
Yeah, and so when I met Dan, Dan was still working his W-2 job. He was full-time employee, but he was also, I think, probably full-time real estate investor. Like you got to the point, right, where you couldn't handle it.
I was burning it at both ends. I was about 35 pounds heavier because I did nothing but work.
So he was still W-2 at that point, but Dan came to us and said, I got something like 30 units. I need help managing them. And then we started helping Dan manage his units with my management company at the time. And, I remember at some point he was just like, hey, I'm going to quit my job and this is going to be my full-time thing. And he took over his units, started managing them again. And then the next thing I know, like Dan's got 600 plus units. So he's done massive growth in a very short period of time. And you now employ what, 20 people, over 20 people?
Yeah, I think we're at about 20 here locally in the Pittsburgh area, and we have 5 team members over in the Philippines, which are huge helps. Like they've been phenomenal for us.
Awesome. So yeah, big moves in the last couple of years. So give us, we're going to start this interview just like asking the basics, right? Like give us just a snippet of your story. Like where did you come from? How did you get to where you are right now? Certainly.
I won't dwell too much on the past, but I'm born and raised in Pittsburgh. So I love the city, grew up in the city, grew up in the north side, and Westwood also. My parents were divorced, so I lived kind of between those areas, went to Perry High School, went to Robert Morris, and used to work in a factory with my dad for a little while and bus tables at the Green Tree Marriott for a while with my mom, and went to college, got around a different circle of people, got an internship, which was really the game changer for me. I got an internship with a Fortune 500 company. They taught me sales, which has been a remarkably useful skill, learning how to relate to people and build relationships. I'm a very relationship driven person. That internship, I think, changed my life. Like literally my first boss is one of my bigger lenders today, after 20 some years. So we're very, very good friends. He's an investor in one of our latest syndication deals. But yeah, did the internship, had about a 15 to 17 year career in sales, mostly in the logistics area. That's trucking, mostly trucking, less than truckload. We did some warehousing, stuff like that. But being in sales, you get those companies that change your commission all the time to make you run faster on the hamster wheel, as I call it. And being, one of the top salespeople, you get a little cocky in your career. And that's when I started to look at alternative ways to make money. I did try trading options for a couple years and basically broke even. Well, this is like right after the bottom of the market, and I'm too emotional for that stuff. So I turned to real estate because now I know it's not as liquid. You can't just make an irrational decision to sell a property. But I love the tangible aspect of real estate. So I started dabbling in that. It was a side hustle and it became my passion.
Awesome. And yeah, the other thing about real estate is like, you can screw up and make an emotional decision. And as long as you hold on to the real estate long enough, it'll still be okay.
Yeah, absolutely. My good friend says, with time, real estate is undefeated.
Yep. Yep. Awesome. So what is the name of your business, and like, what do you specialize? Like, what is your focus right now?
Sure. So we have, I think, 30 some LLCs. So like right now I'm under the brand of Achieve Capital Partners. What we're looking to do is bigger syndication deals and really move into that private equity space. So we focus on multifamily investment. I would say that's the biggest asset class that we're focused on right now. The other side of the business is really the lending side of the business. So we do hard money loans for local investors for the most part. I've invested outside of Pittsburgh, but for the majority of our loans originated, they are based in Pittsburgh. I just feel like there's more control there. We'll do some transactional lending. I'm actually funding a deal today down in Texas for someone that's doing a double close. We'll do some earnest money deposit, funding as well. We call them joint ventures. But really the lending side of the business and the multifamily space, I would say, are the two areas of focus for us right now. But with that said, like I said, we're getting into the private equity space. We're helping a developer do a RV park down in Texas right now. So we're going to raise capital, get equity, and probably manage it as well. But yeah, so that's our primary focus right now. I'm not doing much flipping right now, and I am not doing a lot of scatter site rentals at this point. It's just hard to manage with the machine that we've created.
Yeah. So you're mainly focused now on buying buildings, right?
Yep, absolutely. And honestly, it's bigger numbers. And I couldn't be here without going through, the first flips. I mean, my first flip was in 2013, it was 10 years ago in Dormont. I couldn't have gotten to here without doing the singles, doubles, and quads, right? Like that experience was integral in me learning how to take a value add building and turning it into a stabilized asset. So, while we are mainly looking to apartment buildings, I know a lot of that seems like, especially for new investors, seems like it's out of touch. I probably studied for close to a year and a half before I was able to purchase our first large portfolio, which was 305 units. So I literally, in the same year, eclipsed 100 units in June. I think it was May or June. And by the end of the year, I was up over 500 units, or no, over 400 units with the 305 unit purchase. So it's just about, I say focus is a superpower. I started telling people for over a year that I was going to buy an apartment building. And one of the things I like to tell people is, if you don't know what you're looking for and you're not focused on it, nobody else is going to know what you're looking for. Both of my big purchases, 305 units and 258 units, have come to me word of mouth. So from a wholesaler and then one of my employees. So if you're focused on flipping or single family rentals or duplexes, tell everybody what you're looking for, and don't chase the shiny penny, because your cost of lead, your cost on lead acquisition is going to be much lower, because you will get those word of mouth leads because they know that's what you're focused on.
Yeah. And that's, I think that's a very important thing for us to repeat right now, is there's a lot of gurus out there. I've seen gurus tell you, they say, don't let anybody know what you're doing, and then surprise them. And then I've also seen the gurus say, let everybody know. Right. And I agree with you. Like, if you're looking for something, ask for it. Mm-hmm. And then usually if you ask enough people, you'll get it. It'll come to you. So that's super important. That's a highlight there. Good stuff.
When I had my first, when I had my full-time job, I couldn't be as public about what I was doing, right? The reason I quit is I felt bad, because I worked for a great company. I'm still friends. He's actually one of my lenders, the owner of the company. I was cheating on both things. I was cheating on my job, but I was also cheating on my passion, which was real estate. I mean, every lunch break I'd run out and do some, contractor or project management or, vet deals during lunch.
Meet
And
with
at
your
night,
property manager. I met with you a couple times when you were on your lunch break.
absolutely. I lived and breathed it outside of my real job. And I was always a top sales rep. That last year, I sucked as an employee. I joke about it with my old boss, but I'm making him money now. So I guess,
Yeah.
we'll pay him back one way or
Yeah,
another.
it'll come back to him. So why real estate? Why real estate in the first place? And then why real estate now?
Yeah. Like I said, I would have loved to have done the market trading. I'm too emotional for it. I did try it for, a couple years trading options. I'm not good at it, right? And real estate was just something that made sense because of that tangible aspect. I could go to it, touch it, feel it, see it. So that was really the main reason why I got into real estate. And once, I did my first flip, and I love telling the story. Like I literally almost got cold feet and walked away from $5,000 hand money to making 27,000 on my first investment. I was kind of hooked after that, and then just start buying, whatever. I was very opportunistic and not focused, so that's why I was do flips. And if it didn't make sense to flip, I would buy a single family rental and then a duplex. And I did try like almost everything. I've done subject twos and all that stuff, but that did help me learn. But I really didn't get the growth effect until I got really clear on what I was looking for and focused. Then I had the hockey stick growth.
Awesome. And so why did you stop flipping?
Flipping is fun in one aspect, right? It is awesome to take a turd and make it an awesome place for a new family to live. But it is very time intensive. There's always, I go over budget on every single project because if I see something that needs done, I'm going to do it. I do that in my flips and rentals. Like you said before, in your rentals, you can absorb a mistake that you made or an extra investment or justify going over budget. In a flip, that hurts profitability quite a bit. And as I kept growing my rental portfolio and getting my average monthly rents, greater and greater each month, like if I looked at what a flip gained me and overall, if you averaged out what you made over the months of the project. So if it took 6 months or, we typically probably average 4 or 5 months close to close, the returns just didn't seem as good to me. And it was very resource intensive based on, I'd rather, I can go renovate one house and it takes 2 months, maybe 3 months, or I could go in an apartment complex and knock out, dozens of units, right, in the same time frame. So it's just a preference. I mean, there's bigger numbers in the big multifamily apartment complexes, so that's where I'm going to spend my time. I'm just trying to we all have the same amount of hours. I'm just trying to multiply the amount of dollars that I can make with the time that I have. So I love flips, love decorating them. I love getting them staged. I'm terrible at decorating. I actually don't care what color the walls are. So I pay other people to do that, but just felt like I could build that legacy wealth that I'm chasing with the multifamily space.
Right. And one of the things that I never liked about flips is like, if you screw up a flip, flips don't always work well to hold on to, right? Like if
Yes,
the rent numbers aren't
most
there,
of them don't. Most of them do not.
yeah. So like if you screw it up, like you can't really, there's no plan B. Plan B is like you give it back to the hard money lender or the bank, right?
Yeah, or you have to leave 50 or more $1,000 in some of these things,
Right.
or 20. That most people can't do that, and we got into a place where we had to leave some money in deals because whatever appraisals or whatever the case, we went over budget. And so we sold off, I think, 40 of our scatter site units last year.
Yeah. Okay. So you got started flipping, but you said you were opportunistic, right? So you were flipping, but you were kind of looking at other angles of real estate, right?
Yeah, I mean, definitely, I did a lot of mailing and then pay-per-click. So I mean, I took what I could get, and I wish, you know, the Joe Callaways of the world and the City Lights of the world that do those farm areas. I respect the hell out of that. Like, that is the game when you can be known as the home buyer in that area. So I'd recommend that to anyone. If you don't have a ton of time, really focus on an area and become known for that area as a property buyer. But I didn't have that luxury because I did have the full-time job. So I would get pay-per-click ads or leads from all over the place. I wanted to flip a couple, my stated intent first off, while I was side hustling it, was flip a couple houses, 2 or 3 houses a year and make an extra $100,000. That was really all I wanted to do when I started. I never had aspirations to own hundreds of units and have, you know, whatever, 20 to 25 team members, however you want to call it. So it just kind of evolved. But as I was looking for flip deals, I found stuff that could cash flow and made sense from a rental standpoint. And that's where I picked up, you know, some really cheap single family houses, some duplexes. Man, I crushed it on duplexes for a long time. I still have very profitable duplexes that we bought a long time ago that are worth three times plus what I have into them.
Nice. So what clicked? Like what was the thing that made you say, like, I want to start buying and holding, and I want to do it big?
Well, what made it click for me that rentals were the way to go versus flips was I think I had maybe 12 or 13 units at the time, and I love my spreadsheets. I have a spreadsheet, and I just put 3% growth on it for like 15 or 20 years. And like, I used to have passwords that were whatever, retire 2 million and stuff like that, because in my mind, if I retired with 2 million, I'd be the richest person I knew. And I did this little model of 3% appreciation because that's typically what you were told or what we experienced in Pittsburgh, right? And I would have been able to, those properties would have been worth, I think, $13 million or something like that. And we all know we've actually had double-digit, you know, appreciation in the past few years. It's been way better than that. But that little model right there, when I saw that I could get above 10 million in overall property value just based on what I already had, I'm like, this is way better than hustling for the next flip all the time. And so really those models, once I started playing around with those numbers, I was like, you know, we gotta hold these things. And I think really you don't have to get great. I always buy for cash flow. Properties have to cash flow for me to buy them. And appreciation is just a bonus, but I know appreciation's happening, especially in an inflationary market like this. So now I really understand money. Like, what if you can get long-term financing, lock in today's pricing, and pay it off with devalued dollars, like, you just don't like, if you have not looked at those models, the wealth building is unbelievable, but it has to cash flow today. Cash flow will continuously get better as you hold on to properties, but like the money gains is really what drew me to rentals versus the hustle of flipping.
Yeah, a lot of people are like all about gold right now. It's like gold because it holds its value, and it's like, yeah, it holds its value, but real estate increases in value, and it's exponential.
Man, I used to listen to a lot of talk radio and probably got brainwashed. I'm glad I never invested in gold. I don't know anyone that is like, man, I'm glad I bought gold. I have so much money now. Like, real estate, I know a lot more people that have made it in real estate than I do buying gold.
Yeah, and every once in, like, I get on that train where I'm like, oh, shiny stuff, right? And then I've been like, you know, geeking out on YouTube watching silver and gold stuff lately, and I'm like, oh, I should buy some, and I think, man, that's stupid.
Focus is a superpower.
Yeah. So yeah, and we're talking like internal rate of return on some of your deals. Like, what are we looking at here? What's the internal rate of return?
Still remains to be seen. I think the first one will be in the mid-teens. I think the second one will be, you know, in the mid-20s to over 30% because we crushed it on that. We bought 258 units for 18 grand. It's insane.
18 grand a unit?
Yes.
Wow.
Yeah.
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 So, and you look at, like, when you look at those numbers, that's what a lot of people don't see in real estate. They see like the 8 cap or the 7 cap, and they don't look at, well, the fact that your rent is going to appreciate at 4 to 5% annually also. So that goes up every year typically. And then you've got the appreciation of the actual asset, and then you have the mortgage
Yeah.
being paid down by your tenants, not by you.
I love another reason why I like large multifamily is, and really anything 5 units and above is considered commercial. So you're going to have that, uh, um, the performance factor really driving what your value is versus the 1 to 4 units. I learned this the hard way, is really driven by sold comps. So your cap rate doesn't mean crap in a 1 to 4 unit building. So we had, I don't know if you remember the Maple buildings, we had 2 4-unit buildings, but in my mind, they were 8 units. So it was a commercial deal. When we went to refinance that, I had all my cap rate statistics and everything else on the finance side, and the appraiser didn't care. Like, he took that into account, but ultimately he was comping our 8-unit complex against triplexes and 4 units in McKees Rocks and Coriopolis, because there's not a lot of 3 and 4 unit buildings that trade. So you get a lot of crappy comps on that asset class. So I like commercial because of that. If you're in the 1 to 4 unit space, like I said, duplexes crush it. And there's a lot of duplex sales. So I really love duplexes. 3 and 4 units are tough to get comped out on. It's tough to burr right now anyway, but 3 and 4 units make it even more difficult. Whereas the 5 units and over, and I love the 100-unit complexes and above. So if any of you guys have any apartment complexes that you don't feel comfortable taking on, I'm the guy to come to. But if you just increase rent $25 a month across that complex, like it's insane on what that does to the value.
Yeah. So forced depreciation, you can get that out of the commercial zoning, but you're not going to get that out of your 4 units and less. And that's like, I will attest to that because I've seen it as well in my portfolio.
Absolutely.
So how do you put deals together? So we already talked about, like, when you're looking for something, you're verbal about it. You go out there and you say, hey, this is what I'm looking for. Who do you know? Are you syndicating these big purchases? So you've got partners, you got limited partners. How does it work?
So I've fund deals, and I want to make sure I speak to everyone. So the big deals, I do syndications, and I'll get to that. But I've bought deals with home equity lines of credit, and I've funded the rehabs, and then I'll refinance. I've done the self-funded. I've done a lot of hard money. I did a couple hard money loans initially, and then I just started having people lend to me on deals, right? So I had private lenders, and it only took me like 3 or 4 deals to have literally friends and family say, how do I get involved with you? And then I would pay them whatever, 10%, whatever the case may be, not that high of interest. Like, they were happy with those returns. So I've borrowed to acquire assets. And as I started getting into the bigger deals, I've done some seller finance. And then I've also partnered with people where they bring the down payment, and I was giving them 50% equity. So you can bring in joint, either create an LLC where you do a partnership or do a joint venture where they bring the money, you bring the hustle, and you guys split the equity. And don't worry about this one deal. You got to think about 10 deals down the road. You got to build up your resume so more and more people say you're a valuable operator to deal with. You're someone worthwhile doing business with. So partnering's been huge. And then that graduated up into, we got these big opportunities, and people, I already had people set up knowing that I'm looking for apartment complexes. So they wanted to see how they could get involved. And to do a syndication, to get big loans, my first loan was 14.4 million. Like, that's an insane. My biggest loan before that was, I think, 600 some $1,000. So we went from 600 some $1,000 to 14.4 million in the same year, by the way. I had a good net worth in liquidity, but not good enough for that. So I had to bring on someone else to help me be a general partner and guarantee the loan. So they got a significant amount of equity for that and some other contributions to the partnership. And then so you have a general partnership that kind of manages the deal and puts it all together. And then you have the liability. And then you have limited partners that provide the capital and they get ownership percentage, but they have, very limited rights on as far as management and stuff like that. So that's that's a simplistic way of saying what a syndication is. So very simply, it is a partnership. It's a group of partners that has a general partner. That's usually the manager. And then you have the limited partners that invest in return for, preferred return or equity and a combination of. So they look at IRRs but the overall exit value is a big thing as well. So hopefully that was explained in a good way for you.
Yeah, and I'm sure we'll have questions towards the end of this, and I see we already have one in the chat. So guys, when we got about 15 minutes left, we'll open it up for questions, and then we'll get to anything that you guys put in the chat too. So if you want to, as you have questions, pop them in the chat and we'll go through them. So syndications. So would you recommend, if somebody wants to get into big apartment complexes, would you recommend that they jump right into it and try to form a syndication, or how would you recommend they get started?
I would recommend they participate by seeking people that have done it before. A strong operator everyone teaches you in real estate how to buy properties. No one teaches you how to keep them. And I'm telling you, in the apartment game, like, you need to be an operator. We have, in that first 305 unit portfolio we took over, we've easily evicted over 100 people. Like, that's not an easy task. And it's been like, we've had our, pardon my French, but nuts kicked in quite a few times on that portfolio, and some learning experience. It's made us stronger, but so if you found a deal, I would find an operator or someone that can bring the money, and you provide the hustle. You add more value than you're going to get in equity. Yep. And be a part of that deal. Again, don't think about this deal. You got to think about what's coming down the pike, right? So you might have to take less equity up front, but if you get some experienced operators and or people that can raise capital, that is going to, you're basically getting equity and getting paid to learn the game from someone that's been through the process already. So I don't recommend just going on LegalZoom and getting your legal docs and putting it together yourself. Like, I pay 15 grand per syndication, for a lawyer to put together the documents, customized for each specific deal. So I would recommend people partner with someone that's done it before.
Awesome.
But finding the deal is the most important thing, as always, like in any asset class.
Yeah, he who controls the deal, controls the part, well, at least part of the profit, right?
Absolutely.
Why do you partner up? So why did you get into syndications? Why do you do it?
Well, it's a lot of people were wanting to get into real estate with me. Like, they wanted to get in, but you can't do that with a duplex and 4 unit, in my opinion, and it be meaningful. Like, I was able to just pay them as a lender better than I could as the cash flow on a duplex, right? That, to me, the numbers just didn't make sense. So I was wanting to get some of my lenders more involved in real estate, get them meaningful, like depreciation and other tax benefits. And the pie is big enough to share where they can have equity. I wouldn't give them equity on my duplexes. Like, it just, again, it didn't make sense. So these big deals, the pie is big enough to share, and you can get more people in. So that's really why I like the partnership. And realistically, you cannot solopreneur these multi-hundred unit complexes. Like, you'll wither real quick. I mean, it's not an easy feat. You do need partnerships to make these deals work, from a money standpoint, from a resource standpoint, legal standpoint, asset management standpoint, property management standpoint. Like, when I first started, I really didn't understand the difference between asset management and property management. Those are two very separate aspects of the real estate game. So the partnerships help you. Again, I pay for speed, man. So I'm happy to give away some equity so that we can have a successful project.
Awesome.
And you also have to attract money, and equity does that.
Well, yeah, and then once you get going with a track record, then I'm sure like your goal is that it gets easier, right? People start coming to you and people start referring people, right?
Yep, absolutely. Like I'm pretty open about it. My first deal has been tough. The second deal is way better. But the second deal is helping me fortify the first deal, and I wouldn't have gotten the second deal if I didn't do the first deal. So it comes in evolutions. That's why I say, like, you don't have, like, there's a billionaire that I follow. He's in like my Apex mastermind group. He started out with singles, went to doubles, triples, quadplexes, 5 units, 6. I mean, he did not skip a level until he got to about 12 units. Then he took down like a 100+ unit complex. So like those, knowing how to stabilize those asset classes are very valuable to learn in the game and get your feet wet in the apartment space, if that makes sense. Like, you can just jump in, but if you're going to do that, you need to partner with an experienced person, in my opinion.
Yeah. And what you were saying, I wanted to clarify too. So you said like it doesn't make sense to partner on duplexes. And I was in that same boat too. I had people saying, hey, why don't we partner on this like 4-unit or whatever? Yep. And to put that in perspective for everybody who's on this meeting today, like if you form an entity to buy a duplex with your partner, and then you want your taxes done by an accountant, they're going to charge you like $750 to do one entity's taxes, right?
Easily.
So it's like, and what are you going to cash flow on that thing? Maybe $2,400 a year when it's all said and done for the first couple of years. So then you took almost 50% of your cash flow and just paid it to an accountant. So that's where like it does not make sense. Like we looked at that too years ago.
Yeah, you'd have to do multiple deals. Yeah. And again, the numbers on the bigger complexes it just makes more sense. Again, bigger pie to share.
Yeah. So what is your 5-year goal? What is your 10-year goal?
10 years too far out, man, for me, to be honest. I mean, honestly, my goal is my next objective, and I don't see why I couldn't do it next year, is to get to 100 million. But ultimately, I would say 5-year, we want to get to $1 billion in assets. And I do think we will deviate outside the multifamily space, but I would do that through partnering with operators. I think that's the direction and how we really grow, is that we become so good at raising capital that we partner with operators, good operators, that can maybe get us into some whatever bigger multifamily, maybe a little better class of assets, right? And then also other assets, like I said before, we're getting involved in an RV park development right now. So, but we have a strong operator that's going to do all that. So yeah, we'll probably delve out of that. But yeah, I'm looking at, my goals are based on assets under management at that point. So $1 billion in 5 years is realistic.
Awesome.
And why not?
So,
it's cool.
What's that?
So it's a lot bigger than the $2 million.
Yeah, your $2 million.
I used to
a little bit more than that.
Yeah.
So, so here's another question. Like, I don't know if you follow Grant Cardone, but Grant Cardone says $1 million ain't shit. Do you agree with that?
It's becoming that way, but I won't go that far. I think that's a great, I mean, if you amass $1 million, like, I think that's pretty cool. But like, if you live a long time, and we're living longer, I mean, it can run out pretty quick. I mean, just do math. And by the time you retire, like whatever, it's probably not enough to really retire, to be honest. I mean, if you look at inflation, I mean, I can't believe, like, you go to Five Guys for a burger and some fries and a drink, it's $20. Like, it's easy to spend that money if you plan to retire early. If you don't plan to retire for a while, then it's not. I would set sights much higher than $1 million, but most people don't even have that. So I don't want to crap all over that goal.
Yeah, but yeah, that's, I mean, I think it's a great goal for people to have. You know, that's like, we all have to have our stepping stones, right? And it doesn't go as far as it used to, that's for sure.
Yeah, I mean, and you got to listen, you got to think about when you're going to retire. I mean, if you're not retiring pretty soon, I do think $1 million is going to be light, you know,
Yeah.
but I think most people are, I mean, you can read the articles, Google them. I mean, most people don't even have that. So I won't, like I said, I won't crap all over that achievement, because that's a pretty cool achievement. But yeah, you've got to set your sights higher than that, in my opinion. And real estate's the place to be. I mean, all you guys are interested in real estate. I'm sure it's not just to hit $1 million. So if it is, I would advise you to do some spreadsheet analyses like myself, and set your sights a little higher. It doesn't take that much. Like literally buying a house a year can get you way higher than $1 million. Literally one house a year can change your whole world and projections on retirement. And I implore all of you guys to do that, man.
Yeah, and I don't know if you read the book, but Gary Keller's Millionaire Real Estate Investor. I mean, that's the premise of the book, is just like you buy one a year and, you know, you end up a multimillionaire.
Absolutely.
All right, so we're going to open it up for questions. Antonia was asking, what are the requirements for a double closing? Antonia, if you're still on, if you could unmute and kind of clarify that a little bit, we would appreciate it, I think.
Sure. When you do wholesale, sometimes you want that the other part sees your fee. So when that comes, you do a closing and then you wait for the next closing. That's why when you do the double closing, and some people offer transactional funding is the name. So that's what I was asking.
Yep. Yeah, and Dan does offer transactional funding. How does that work, Dan?
I mean, it's pretty easy. You give me both contracts, you know, I'll get on the phone. My assistant will get on the phone with the settlement company and make sure everything's aligned. We'll do a, you know, I think a 2-page joint venture agreement, just so we have everything documented, that it's our money that we're using, and if anything were to happen between the closing, we get our money back. But yeah, it's pretty simple. I mean, we put this thing together in like a few days. So again, we closed today, no big deal. But it's very easy. You just give me the deal specifics, but mainly the 2 contracts that you have in place, and the title company information. We reach out and we do that 2-page joint venture agreement. We verify that with the settlement company that they understand what position we play, and that we're going to get our money back no matter what. And yeah, that's as easy as it is.
Okay. The JV, how much is the percentage?
It's very situational, my man. You know, sometimes it's 2 points. If it's a low price, you know, we're probably going to ask for more than that. So that's a little bit more of the wild west, but I would say on average, it's going to be 2 points.
All right. Thank you, man.
Yeah, and we will, when we do shoot the copy of the video out to everybody, I am going to include Dan's contact information. So if you do want to talk to him about something that you have going on, that you're looking for funding, or a deal that you might have, he is happy to take a look. And
for anyone that we're known from time to time where wholesalers have too much EMD out there. I mean, you know, if you need earnest money deposits covered, like we can fund that, and that would be through a joint venture agreement as well. And there's some more paperwork involved because it takes longer, but feel free to reach out to me for that stuff as well.
I'm curious about that. Like, how would you structure with a joint venture agreement as well? The earnest money.
Joint venture. Yep, that'd be a joint venture agreement for sure. And the wholesale agreement would need to be used would be one that we have approved. But yeah, it'd just be a simple joint venture agreement. Again, just understanding that if things went sideways, we get our money back. That's all. But we can fund that.
And what are the fees for something like that now? This is the same.
Again, that's very situational, because it could be like some people need $2,000. It might be hell, it might be a $50,000 apartment complex earnest money deposit. So it's very situational. There's not a standard for that. Usually I'm going to ask you, what are you offering? To be very clear, like I'm pretty transparent. I'm not trying to be wishy-washy, but like if you approach me with a deal, I'll say, okay, what are you paying on it? It's either going to be worth it for me or not.
Dan, sorry, I don't know if you can hear me. It's Anissa. I'm in my car.
Yep.
We're good.
So what do you prioritize when you think about funding a deal, like for a flip? Is experience a factor? Are you more concerned with the, equity in the property? Like, what are the things that you prioritize over everything else? Like, you have an investor who maybe never flipped a house, but has a really good deal in front of them.
Experience does matter for sure, but obviously the asset matters the most. But again, I'm big on, making sure the operator's sufficient enough. Like we have lent to first-time borrowers, but I would say that the vast majority of our borrowers, and we're just about to eclipse $20 million in hard money deals funded, which is it was eye-opening. I didn't know that until really this month, which is a pretty cool number to accomplish when this was really never our main business. But I do look at the asset. I'm not going to lend on anything I don't want to own. I will tell you, in all the deals we've done over 150 deals. I've never had one default. So we pick good borrowers and we pick good assets to lend on. I turn down deals every day. But experience does matter, Anissa, like for sure. And how I know, like, I'm going to look at what comps you provide, and I'm going to look at what your scope of work looks like, and then obviously look at the property. So if your scope of work aligns with what the work is that I see, then I'll be like, okay, we'll take a little bit of a chance. It's higher risk, but yeah, experience and then the asset are the two highest things for sure.
So you don't send, like, I know Rick Tufone used to send like an appraiser out. Todd Banco, I think it was. He used to
So
send an
I
appraiser
just spoke to Todd. I will probably be utilizing that and it's more from a time standpoint. I don't have as much time to run around and look at the properties myself. And I think I'm doing my lenders and my investors a disservice if we don't, dot our I's and cross our T's on verifying that the property's value is correct. So we'll probably be going in that direction.
So like on the lender side then of things, or do you guys have investors who, I guess, have you place their money? Is that something that you can do without an LLC, like because of like securities laws and stuff? Like, how does that work?
The way we do it, we do individual promissory notes. We do it with an LLC. I would advise not getting involved in that without an LLC, but we do individual promissory notes. So we'll probably we will be starting our own fund, more of a technical fund. But right now we just do individual promissory notes with our investors that when we use their money. So we use a combination of our money and investor money.
Yeah, and I'm pretty sure it's still the same, but it's like, if it's friends and family and you're not going out there and advertising and trying to like bring in just random people to invest, that friends and family is not an SEC thing that you got to get cleared. Now, full disclosure, you guys need to talk to an attorney to make sure that what Dustin and Dan says is accurate, because we're not attorneys. But
I would definitely advise they talk to an attorney. So the guy we did our syndications through is a SEC, certified attorney, right? Like that's a specialty. He says that promissory notes are a security. Like I heard this as recent as, 3 weeks ago. So I would definitely talk to your attorneys before you take money and then put it into something else. It's definitely worth paying an attorney for advice. I've paid attorneys and they said the way I'm doing it with the individual promissory notes is fine, but I would do your due diligence for sure.
Yeah, it's always cheaper to pay an attorney first rather than after you need them to fix it.
Yeah, it doesn't
Right.
matter until something goes sideways, and then you'll find out real
Yeah.
quick if it was an
The
SEC
attorney would have
violation.
been
But
way cheaper than the feds or the IRS or whatever you're dealing with.
but if it's friends and family, like we did friends and family raise for our first syndication. So there's, I don't want to get too technical, but there's a 506B exemption from the SEC regulations, and then there's a 506C. 506C is where you can only take on accredited investors, which is, I believe, a net worth of $1 million. They have to make over $200,000 or $250,000 a year. They have to be accredited, and you have to verify that. But if you go that route, you can blast it out. You can take out Facebook ads, advertise on LinkedIn. You can, pay the guy that writes signs and holds them up. Like, you can do all that stuff with a 506C exemption. 506B is typically what they call friends and family. And you can take non-accredited investors, but you cannot blast it out and advertise it. But that is still, that's an SEC exemption. So but that's under the guise of a real estate attorney, an SEC attorney doing that paperwork. Taking someone's money, even with a promissory note, I would implore you to go talk to a lawyer because I've heard recently that it is a security. So yeah, I would. There's a lot more that goes into that before I would recommend people taking money and then lending it out and playing the arbitrage game without talking to an attorney.
Which is why it's so valuable to have you lending that money out as somebody who's already done the due diligence, who's protecting your investment and theirs, and your investors' money too. Because like I actually have always said to anybody, regardless of whether you can afford or can get a loan or can afford a loan for a rehab, I think that there is so much value in using a hard money lender. Because my first deal that I ever did, I used Rick Tifone, not Tifone. And what was so helpful about that was he really did make me go through the process and cross my T's and dot my I's, and the follow up on not just making sure that I had a plan and a scope of work, but that it was being followed through with on the end of like my contractors, because you don't always, but you don't want to get to a point in your rehab where you're too far behind and you find these things out at the end. So when you're breaking it up in stages and having to get draws for that money, it certainly prevents you from going too far with things not being
I tell everyone, if you have some cash on the sidelines, keep that stuff, man. That's your war chest, because you're going to go over budget when you're renovating places. So you need that extra money as a safety net for when you go over budget, or if you go over time, you need extra holding costs. I promise you. So like when I first got started, I had a good line of credit. It was like 125 grand. You could do any regular flip you wanted to back then, 10 years ago. But I did 2 deals at the same time. And then I had a third deal and the one got held up. So I got real tight, even though I had a 6-figure job. My wife had a 6-figure job. We had this good line of credit available to us. I had some sleepless nights, to be honest. So that day moving forward, I said, I am borrowing on every single deal. And that's when I got my first hard money loan that I only had out literally for like 90 days. When I borrowed, I was like, I'm getting this thing paid back quick. And long story short, my philosophy now is keep your money, whether it be a line of credit or cash, keep your money in the bank, use that for when you need it. Because it's a lot easier to get loans when you don't need it. When you need the loan, you might not be bankable anymore.
Well, right now, especially with everything being the way that it is, it's just, so much uncertainty and, look at what's happening with the banks. But I think, it's expensive to borrow hard money sometimes, but the truth is it's the cost of doing business. And if you can't afford to pay the hard money on the deal, then the deal's probably not that good, because
Absolutely.
you don't have enough meat on the bones then if something does go wrong.
Yeah.
That's what that's telling me.
Yeah,
And listen, this game's all about relationships. I mean, I've had lender or borrowers say, hey, I went over budget, like, you know, we have this deal under contract, I need extra money. And like, at that point, we're like 55% loan to value. You have that relationship, like you have a little bit of a relief valve. I know, you know, Chris Masuka's done that for borrowers too, mutual borrowers. So relationships, everything. You can't fake a track record, like all that stuff really matters. But hard money lenders, private lenders can be very important tools in the real estate game.
Oh, 1000%. And it does. It just, you're not making anything if you can't get that deal closed. And the way that you guys are able to turn that around and really get to closing quickly and just make those terms so much more attractive to a seller.
And I've saved some people from some really bad deals by telling them like, this is not a good buy. So it does help to have that second set of eyes on your deals, especially if you're newer.
A lot of accountability, because yeah, you can get into a deal and by the time you realize that you made a huge mistake, you're too far gone. But like, guess what? Your line of credit isn't looking at the comps or telling you you're in over your head or it's a bad idea. But that investor is protecting their money and their investment. And so they're not going to let you go into.
Have you ever seen those Facebook posts on the real estate investor page, like house for sale already gutted?
Yeah,
that's a person that ran out of money.
Yeah. So
there's no doubt about it. Those are contractors that didn't have their finances set up, or flippers that didn't have their finances set up, and they either bought a turd or they ran out of money. So. Yep. Yeah,
we should round them
for
up.
Sure.
Dan, you could use them for a commercial. Don't be this guy.
So Dan, Jason's asking, did you ever run into debt to income issues when trying to get funded by a bank? So I'm assuming what he's meaning is like, as you start buying more assets, right, you start ending up with a lot of debt out there. Are you having banks shut down financing because of that?
I've had some difficulty the last couple years, and mainly because it's very difficult for even me to explain my tax returns because we have the 30 different entities, right? And we have so much depreciation. I mean, this year in depreciation, I had close to $1 million. Like it's insane. And if you don't know how to explain it, like I was just trying to up my home equity line of credit because I have more equity in my house. Like the traditional banks do not like my tax returns, so I would call that a debt to income issue. The commercial banks, I don't know, I've not had an issue getting funding, but I also haven't bought anything big this year. Well, yeah, that was August of last year, so I haven't bought anything this year. I'm pretty much in stabilization mode and then looking for operators to join in their deals this year. That's really what my focus is. So debt to income can definitely be an issue as you scale up until you get your income up to speed. So definitely something to be cognizant of. So it's been a challenge for sure, but like fortunately we have good income. So you know, my goal is to never pay taxes again using the depreciation that we have. I mean, we have a significant amount of real estate basis that depreciation should take care of that stuff. But you need to be, again, relationships are everything. Most banks will add back in depreciation and interest. So you've got to learn the money game. So get a good CPA to help you through that. I wanted to show income for 2022. So I believe we've accomplished that. We had to jump through some hoops, so we had to extend at the deadline here. But so I make sure like I'm showing income at this point. But for a couple of years when I went on my own, that was a factor. So I would definitely be cognizant of it.
Yeah, and I mean my experience is the same. The last time, so when I refinanced my house, it was such a nightmare to go through because the underwriter, the conventional underwriter, did not understand, you know, the amount of depreciation I was claiming. Didn't understand, like they were doubling my expenses essentially. But you know, it was a nightmare. So I said after that, like, I'm never dealing with another conventional loan again. Like I'll just buy cash from this point out if it's a personal property.
Yeah, they're the ones what you have the biggest problems with, the FNBs, the PNCs, the Northwest Savings and Bank, but you know, there's other lenders out there, like Farmers that have commercial branches. They can be helps. They can help you for sure.
Yep. When you say operators, so that Mark is asking this, when you say operators, what do you mean?
Operators, I think I saw that pop up. Does operators mean owners? Operators are the people that run the operations for the deal, right? So it could be the guys that are going to do the property management, set up all the contractors, the general contractors. They could be lining up the financing, like they're running the deal. So my goal is to bring the money. I would want them to run operations, so maybe hire the property manager, hire the general contractors. Like, I don't want to get into that stuff. I don't want to create the scopes of work. I don't want to decide on the finishes or what the renovation plan is anymore. So that's what an operator is. And on a smaller scale, if it's a single family house or a duplex or a quad, like they're lining up the contractors, they're getting the estimates. They're doing the independent contractor agreements and scopes of work and stuff like that. So that's what I mean by an operator.
Okay. Do you
there
have any experience with trusts?
Say it again.
Do you have any experience with taking over a property with a trust? Using a
I will
trust?
say no. I have a trust. I've never bought a property in a trust. I have limited partners that invest with trust, but I don't have that much experience with it.
Okay.
I have a question about that. Because I've heard of some people saying that they've taken over properties like subject to the existing financing, but so that the bank doesn't call the loan due, they've put it like in a trust in the name of the property address or whatever. They just named the trust something.
I've heard that as well. That's not sub 2 is definitely not my expertise at all. I've done a few of them, but it's I don't like dealing with the old the sellers, to be honest, because they're a pain in the ass to deal with. But
Yeah, usually if they're in that situation, it's like they're in that situation because they're irresponsible a lot of times, and then it's very difficult for you to get everything you need from them.
Yeah, I was just
Yeah,
wondering if that was what the question was more geared towards.
Yeah, potentially. I do not have a lot of experience with trust from that standpoint.
Okay. Awesome. Anyone else got any other questions before we wrap up?
I have one quick one. What are your projections for like areas in Pittsburgh that you see, I don't want to say up and coming, but as somewhere that maybe is, you would consider investing or you think might be on the upswing? For instance, like I know Braddock, I think that they just put like $20 million into that Carnegie Library there. There's some development going on just through various areas that in the city where they're really getting substantial funding. Is there anything
So
that sticks
I
out
will,
to you?
yeah, I will say this, like, if I'm going to speculate, I'm going to speculate in Texas or one of the southern states. Braddock's probably not it for me. I mean, I don't love investing in the city anymore for a lot of reasons. So I love the suburbs. They're nice and stable. But if I'm going to speculate, I'm going to Texas, like without a doubt, because people are literally moving there by the thousands every single day. Like, you're not having that population increase anywhere in Pittsburgh. You might have someone moving from South Side to the East End, but like, just depresses Southside, right? So I don't know. I'm not a speculator. I like to go where the comps are proven. I'm not a speculator, if that makes sense. I'm not the best person to ask. I'm more pessimistic on comps, to be honest, when it comes to picking the next hot area, because like literally everyone says, "Oh, this is the next Lawrenceville," which cracks me up. Yeah, I've heard that even in Beaver County, which there's nothing that's going to be the next Lawrenceville in Beaver County. So yeah, if I'm going to speculate, I'm going to a different market like Columbus or Texas or Austin or Nashville.
Yeah, and you're right, because Allegheny County's population has been decreasing over the last few years. There's just nothing here for people who are younger and graduate. Like, we have great universities, and then once they're through with those, people are leaving to find those opportunities elsewhere.
Yeah, I'll say this, I'm older than you guys. It's a lot better than when I grew up, right? When I graduated college in 2000. Like, the prospects in Pittsburgh now are way better. Like, there's way better jobs and opportunity in Pittsburgh now than there were 20 years ago. Like, high paying jobs, like software development is a real thing here. The medical community is obviously phenomenal here. So there's some good paying jobs here. And we do have, tech companies moving in because of CMU. So we have some good things going. I believe the population has stopped decreasing every year, maybe a little bit, but it's not like decreasing like it was when I graduated college. So I love the area. I still live here. I mean, but it's not growing like going to other areas of the country. Literally thousands of people are moving in like a day. You can't comprehend it being from Pittsburgh.
All right, sounds good. So we're going to wrap it up. Dan, I appreciate it. We are going to send out Dan's contact information to everybody who attended and everybody on our registry. And just a reminder, this is our Wealth Building Wednesdays Mastermind. It is every second Wednesday of the month. You are definitely free to invite others, real estate professionals, and then friends and family, anybody that you'd like to invite. Thanks for coming, everyone. Thank you very much, Dan. We appreciate it. Thank you for your time.
Thanks, guys. Appreciate being on.
Take care.
Thanks. Good night.